Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with the Vice President of Corporate Development and Investor Relations for Calibre Mining, Ryan King. Calibre Mining is traded on the TSX under the ticker CXB and on the OTCQX under the ticker CXBMF. Ryan, it's always great getting you on the show to get an update from Calibre Mining. And I should say on the onset here that I am an investor in Calibre, so I'm biased in that sense. But I was pretty impressed with the news you put out on January 9th, talking about the full year of 2023, the gold production, 283,494 ounces. You exceeded your high end of the guidance that you had set for yourself, and you set yourself up for a strong year in 2024. Walk us through some of the key takeaways from that release as far as the Q4 quarter and the full year from 2023.
Well, first of all, Shad, thanks for having us back on the show, and Happy New Year to you and all the listeners. It is setting up to be a pretty exciting year again in the metal space, right? We're seeing uranium go to multi-year highs. We're seeing gold just recently touched multi-year highs. Gold now today, as of this recording, I think we're sitting at about $2,050, $2,060 an ounce. And last year, I think the average gold price throughout the year was just around 1900. So nice to see from a macro perspective. The metal that we're mining is going up in value. Unfortunately, that's due to a lot of things regarding deficits and geopolitical issues around the world. But nonetheless, for a gold miner, for an undervalued equity, I should say, with a robust gold price environment, it should be leading towards a very exciting year. As you alluded to there, yes, we had another record year. If you look at Calibre over the last 4 years, which we've been now a robust and building gold producer, we've grown year over year almost at about a 20% rate. So we started in 2020 producing 136,000 ounces of gold, grade-driven production growth, and bringing on new satellite deposits through our hub and spoke approach. We've been able to organically grow production, and then of course we acquired the Nevada assets, and we've most recently announced the acquisition to become a diversified producer in Canada through the open pit mine at Valentine. But 283,000 ounces last year, above the high end of our guidance of 250 to 275,000 ounces. And again, the big takeaway there is the beat on the production. And our operations in Central America continue to work very well, bringing on new satellite deposits. Last year, we brought on the Pavon Central open pit deposit. We brought on the Eastern Borosi high-grade open pit and underground deposit into the Libertad facility. And of course, we still have 1 million tons of surplus capacity, which lends itself to some further upside and excitement. And what I'm really excited about, again, as we've just recently talked about, is we continue to deliver quarter over quarter under Darren Hall's CEO stewardship. We continue to deliver. And again, Darren has been in this business for 30 years, so he really recognizes the value of doing that. And it leads itself very importantly as we make this transition now into Canada, right? When we've been delivering quarter over quarter, given the assets that we acquired in 2019 and where they've been able to come to in terms of resources and reserves and production, now we put ourselves in a great position and built a great platform such that we can step up in terms of jurisdiction, Canada, Newfoundland, and in terms of quality of asset, a multi-year, multi-mine life deposit in Valentine. And, I've had a lot of folks coming back to me asking questions about Valentine, the transaction. And I just say, well, look what Darren has been able to do. Look what we've done over the last 16 quarters delivering. I have a very high level of confidence that we'll be delivering going into the future as well.
Well, Ryan, before we dive over into some of the potential synergies, providing that the transaction goes through, that you move into the Newfoundland and with the Valentine gold mine, let's just hone in on the guidance that you released earlier this week for 2024, which is about 275,000 to 300,000 ounces for the year. One of the observations I noted was that a little bump up in the all-in sustaining costs from $1,275 to $1,375 per ounce. But you mentioned to me off mic, and maybe you can unpack that here, that there's also still going to be the same amount of spend. It's just kind of the accounting as far as how you're deploying capital versus where you're exploring versus where you're developing. So maybe outline for people how that all shakes out with the slightly higher cost, but the capital spend still remaining about the same as it was last year.
That's a good point, Shad. And I think our guidance for 2023 was 1175 to 1275 on an all-in sustaining cost basis. I think it was 55 million to 65 million in growth capital. And I think it was around 25 to 30 million dollars in exploration as well. Now, looking ahead to 2024, yes, correct. Our all-in sustaining cost guidance went up $100, 1275 to 1375. However, as you pointed out, our total spend when we factor in growth capital, that's buying land, that is pre-stripping, that is developing new satellite deposits, is coming down this year. Our exploration is staying the same. And so when you look across the landscape on total spend, when putting all the all-in sustaining costs and the growth capital and the exploration expenses together, you recognize the fact that, oh, okay, this should be a total spend similar to 2023. So in fact, when you look at, again, we talked off mic about margins, given we're seeing a $2,000+ gold price environment across the board for the business, we're going to see higher margins. We're going to see more free cash flow outside of Marathon from what we did in 2023. So yeah, it's an important aspect to bring into the equation, because a lot of times people will focus too much on just total costs or total cash costs or all-in sustaining costs versus the overall spend of a business. And when you factor that in, yes, we are same spend as 2023. And 2023 was a great year for us, as you know. I mean, we put out some numbers here in that press release a couple of days ago. It was 283,000 ounces, as you mentioned, 75,000 ounces in Q4. And that led to 86 million US in cash. That's a 52% increase from where we were at the end of 2022. But what's really important out of all of that as well is that we also put $40 million investment into Marathon as we announced the acquisition of the company as well. So we would have sat at about 115 to 120 million dollars of cash on the balance sheet at the end of the year. So a really, really strong, robust year of, let's call it around 65 to 70 million of free cash flow added to the balance sheet.
Yeah, Ryan, nice to see that free cash flow growing. And like you say, you also deployed 40 million into equity into the Marathon shares. So a good use of capital all around, whether it's exploration or development of Pavon Central and Eastern Borosi. On the development side in Nicaragua, or we could even bring Gold Rock into discussion in Nevada, is there any other development stage projects that may get some work on them this year to move them towards the production profile for either this year or moving into the 2025 zone?
Yes, there are. We are looking at new underground deposits. So, for example, up at Eastern Borosi, we're going to be going underground in the next few years. At Limon, we're going to be building the Panteon Norte underground deposit and that whole corridor. We do want to start to understand, or we do want to advance and progress our understanding of the whole corridor. We have put out some results last year at Panteon North, but also along that trend, it's a multi-kilometer trend, a few hundred meters to the north, we put out results along that corridor that had some similar results that Panteon North did. I think we hit 2 meters of 15 grams. We hit 4 meters of 17 grams. So there's a number of good high-grade results, and we've continued to drill that. And I would anticipate that probably end of January, early February, we'll have some more Limon VTM corridor results out to the market. But as we progress our understanding of that, we're going to start engineering and scoping an underground deposit and an underground portal and ramp to go into that system for the future. So that will be part of growth capital. That will be for future gold production, high-grade gold production. As we recall, at the end of 2022, we put out our first reserve at Panteon, which was 250,000 ounces at a little over 9 grams per ton gold, one of the highest grade deposits on the Limon property. And that's really what's exciting about this opportunity here is we continue to see new deposits being discovered, resources being expanded. And that's really where the focus has been over the last little while. But this year, we're going to be drilling across the whole portfolio. So focus there is going to be building some of those or advancing some of those underground deposits. as well as our Volcan deposit at Libertad. We'll be starting to progress that this year. Of course, these aren't huge CapEx items. However, that being said, we're just starting this process here, and that all this capital and development will fall into our growth capital guidance for 2024. And with regards to your mention of Gold Rock, yeah, we continue to advance technical studies there, but really from a bigger stage development, our focus will be once we close the deal on Valentine, considering it's such a high priority tier one asset for us.
Well, let's dive into that because I'm sure a lot of people have questions about it, Ryan, or just want to know more about how the synergies between the two companies will work in the pro forma company. What will the production profile look like? What will the cost structure look like? How much development cost still needs to go into Valentine Lake, the mine there? Just walk us through in general what the synergies are going to be bringing in the Newfoundland assets.
Well, when you talk about synergies, I'll be honest, in the gold mining space, there's not a huge amount of synergies across when you acquire assets. Yes, we'll see some G&A reduction, but what's important here and why this transaction works so well and is so elegant is the Marathon team was progressing this project well. They had brought the construction to 50%. They had completed all the major earthworks, the tailings facilities, the roads, bridges. They'd put in a 400 plus person permanent camp on site. They had power lines to site. So a long lead items were set up and procured. So a very good position. 50% of the construction had been completed upon, I think it was Q3 of last year. And roughly 200 million Canadian had been spent on the project. Now, from memory, I think it was a little over 300 million was remaining to go Canadian on the project per Marathon's disclosure. And why it was so elegant was because there was a need. Marathon had a financing need. And instead of just going out to the market and looking at various streams or royalties or additional equity, they thought it made the most sense to partner with us. We approached them to do that partnership because it was going to be beneficial hugely to Calibre shareholders, but also to Marathon shareholders to roll up into a diversified gold miner. And so from a synergistic perspective, it's very elegant because we can provide that financing need to advance the project and then put the combined company in a position to have 60% of its NAV in North America. So again, I think I've talked about this previously. Great re-rate potential going from 85, 90% of our NAV being Central America, transitioning to a tier one jurisdiction that does get a premium in Canada. And then, as you kind of brought up there, talking about production profiles and what this is going to look like. Well, from a capital cost perspective, we've been sticking with the Marathon disclosure because, of course, we haven't closed the transaction yet, but we would anticipate to do so. We're in really good shape to close. The shareholder special meeting happens January 16th. And then about a week after that, we would anticipate final order and close. So exciting times for all parties involved, all stakeholders involved. And upon that closure, we'll start to look at putting out updates on Valentine. We'll look to put a pretty significant milestone update out, probably end of February, March timeframe, when we have a better understanding, not a better understanding, but just our own approach to what the timeline, construction costs will be to complete, right? Very similar to what B2Gold's approach was on the Sabina asset in Nunavut. So we'll come out with that. But according to feasibility study, and why we're so attracted to this is our due diligence team did a lot of work here and feels very comfortable with this asset, not only from a delivery perspective based on the engineering that's been done, but also from an exploration perspective. So based on that December 2022 feasibility study, again, this is 2.7 million ounces of reserves in 3 pits, Marathon, Berry, and Leprechaun. It is a total 5 million ounce endowment at this point in time. The study showed a 14-year mine life, but in the first 12 years, it averages 195,000 ounces of gold from an open pit a year, based on the 2022 study, which I keep referring to the 2022, just to reiterate the fact that it is fairly up to date in terms of estimates. So they came up with an all-in sustaining cost engineered estimate of a little over $1,000 an ounce at that 195,000 ounce a year range. So now, as I mentioned at the beginning of the call, we're fortunate to have Darren Hall as Calibre CEO. He's been in this business for 30 years, and his expertise really, obviously, is operations, but it's really important to note that he's worked at major, large open pit mines around the world. Some of these things you can see from space. Batu Hijau in Indonesia oversaw all the operations of that. Yanacocha in Peru, Boddington in Australia. So he's very familiar with these types of large open pit mines. And I truly believe that he'll find a way to deliver, but also optimize the quality of this asset as we advance it through the final stages of construction and into full operational mode.
Just a quick note, Ryan. I know that you're going to have to do some studies to see what the timeline actually is, but just roughly, when can people anticipate first production coming out of the Valentine Gold Mine?
Well, again, based on Marathon's disclosure, it would be the first half of 2025, and so as our technical team goes through further details on timelines, delivery, weather patterns, all of the details to ensure that we can deliver upon these estimates, again, we'll provide a fulsome update to the market, but that's what they've disclosed publicly.
Well, and just one more point we should make about the synergies. In addition to the jurisdiction diversification and having 60% of the company value coming from North America, you also have the higher production profile of a true mid-tier at that point. So if you get up to that 500,000 a year production profile or thereabouts, it puts you in a different category, a different snack bracket of gold producers from where you're at currently. And maybe just speak to that about how there could be some re-rating potential there.
Well, I sure hope there will be, because you look across that 400 to 500,000 ounce a year production bracket, just on size alone, the average NAV multiple is 0.75 versus when you look at a junior average multiple, it's about 0.4, right? And so just by going up in size, you should see that re-rate to a 0.7 times multiple. And that presents, as you said, that re-rate opportunity. And it's near term, right? We're not talking 5, 10, 15 years. We're talking, and this is what attracted us to the opportunity, is not just that 50% of the construction is complete and has been de-risked, but it's that it is anticipated to be in production within the next 12 to 18 months. So that's a very exciting point for all the listeners there, and of course myself included, is that we could truly see ourselves morph into a Canadian gold producer with a 400,000 to 500,000 ounce a year production base.
Well, and in addition to all of the development work the company is doing and the potential for production growth moving into 2025, Calibre continues to impress me personally, Ryan, just with the sheer amount of exploration the company does, not just in Nicaragua, although that's where most of it is focused, but in Nevada, and I'm sure you'll be doing the same thing in Newfoundland. You even peppered in a little bit in Washington last year. But when you think about your overall assets, I know the majority of the focus is in Nicaragua as far as exploration, but just give us a holistic, quick snapshot of what the team sets their sights on for 2024 as far as the drill bit.
Yeah, so really exciting to talk again about the exploration potential, not just in Newfoundland, but of course continued in Nicaragua. I mean, we're going to do probably, it looks like, over 100,000 meters of drilling in Nicaragua this year based on our plans and budgets. And we have historically been more focused on increasing confidence in the areas in which we operate. This year, we're going to be pushing that to more resource expansion, discovery phase approaches. Again, along this VTM corridor, I think we're seeing some very exciting results, and it's still got multiple kilometers in front of us. We've been picking up new concessions, looking at filling the pipeline in front of us. I think it's going to be an exciting year ahead of us as we continue to drill down plunge of areas, like, for example, at our Jabali mine at the Libertad property, which is an underground mine. We put out some results that were very encouraging. I think about 10 grams over 14 meters at the end of October. And we've been drilling down plunge of that. So stay tuned for additional updates on that. So lots of opportunity for exploration upside, not only in Nicaragua and Nevada, but of course, that's one of the aspects that attracted us so much to Newfoundland, is that, what's exciting here is that Barry has only been discovered a few years ago and now brought into the mine plan. and Barry is, I think it's almost 1 million ounces in that open pit. So there's great potential along that Valentine shear zone. And one area that the team there on the ground is excited about is what's called the Frank Zone, which is just south, less than a kilometer away from the the last open pit Leprechaun. So very exciting to see. It's going to be a busy year this year as we advance Valentine, and of course as we continue to deliver on our producing assets. So we really look forward to the future ahead.
Well, we'll wrap it up there, Ryan. Lots going on with Calibre Mining. And if people want to follow along with the company news, definitely click on the link below this interview. It takes you over to the company news section. And Ryan, keep us posted as more news breaks on the company. We'll get you back on the show. And as always, looking forward to our next conversation.
Will do, Shad. Appreciate it. Stay in touch.